Welcome to today's episode. As your host, let's concentrate on one of the most significant regulatory decisions in digital banking history. The US Security and Exchange Commission approval of the first spot Bitcoin exchange traded fund in January 2024 shocked the financial industry. For over 10 years, the cryptocurrency industry filed petition with authorities debated in court and watched as application after application was rejected. The SEC alone rejected more than 20 exchange rule proposal for spot Bitcoin ETF. The door was only eventually forced open following a historical August 2023 decision by US Court of Appeal, which concluded that SEC had not sufficiently justified its repeated rejection. Then on January 10, 2024, the SEC simultaneously approved 11 spot Bitcoin ETF, although the approval itself was widely regarded as reluctant. Mainly, analysts have hailed this event as a turning point for the validity digital asset. What exactly a Bitcoin ETF and why does approval matter? A Bitcoin exchange traded fund is regulated financially product that monetary the price of Bitcoin directly and is listed on a conventional security exchange. In contrast to buying Bitcoin directly, which necessity accounts on cryptocurrency exchange, digital wallet, and private keys. A Bitcoin ETF enable investor to obtain exposure through traditional broking accounts and just as they would buy shares in any other company. According to Ahmed Reid, Bitcoin ETF alter market dynamic in three crucial areas: investor behavior, liquidity, and volatility. And Bablos further confirmed that Bitcoin return improved and its volatile decreased when US spot Bitcoin ETF were introduced. This is what experts refer to as stabilization hypothesis in summary. This is when the things start to become extremely interesting because not everyone is happy about this choice. The approval of the Bitcoin ETF has really spurred one of the largest discussion in contemporary finances. So let's analyze its four extremely diverse type of people, four distinct reaction. The supporter of cryptocurrency, and really they are thrilled. They had been waiting for this approval for years. They have straightforward argument. Everyone may access cryptocurrency with a Bitcoin ETF. A digital wallet is not necessary. You don't have to be familiar with the blockchain. All you have to do is sign into your standard broking account, which is the same on when you use buying stock. As Kevin, CEO of crypto liquidity provider, put it perfectly when he told CNBC in January 2024, this ETF has two main impacts: increased distribution in the US and increased credibility of crypto as an asset. There is now a US Bitcoin spot ETF, and Bitcoin is no longer considered shady and infamous. This significantly changed the perception for the mainstream public. Perspective 2: crypto purist. But wait, not everyone in the cryptocurrency world is having a good time. In fact, some of the most passionate supporters of Bitcoin are quite concerned. These are the crypto purists. They also have an entirely different tale to share. But what is purist? It's someone who believe Bitcoin should stay exactly as it was originally designed. No bank, no wall, no street, no Wall Street, no middleman, just people transacting directly with each other. This was the whole point of Bitcoin when it was created back in 2008. Chris Black, host of the Proof Decentralization podcast, said it plainly when he told Coindex in January 2024 the approval of Bitcoin ETF will inevitably turn out to be a very bad thing for Bitcoin decentralization. And honestly, for the purists, that quote says everything. The belief has always been straightforward: if you don't hold your own Bitcoin directly, you do not truly own it. Perspective 3: here is something wild. The man who approved the Bitcoin ETF hated approving it. Gary Glenson, SEC chair, was forced by a court ruling after the SEC lost a legal battle. He had rejected over 20 Bitcoin ETF application before that, and the moment he finally signed it, he said, "We did not approve or endorse Bitcoin. Investors should remain cautious." Environmental critics. And lastly, the voice that Wall Street did not invite to the table, the environmentalist. Bitcoin is more than simply a virtual currency. It uses as much as energy as entire nation and is fueled by actual electricity. Therefore, an ETF that attract millions of new investors will result in increasing mining, energy, and carbon emissions. Market manipulation, which is the first key concern. Now, here is a concern that does not just apply to the past, it applies to directly to the world we live in now, and that the Bitcoin ETF is approved and trading. During the Bitcoin ETF approved process, before a single ETF share had been sold, the false information caused financial chaos twice. October 16, 2023, a fake ETF approval reported triggered an $81 billion liquidation event. The January 9, 2024, a day before real approval, SEC own social media account was hacked and used to post a false announcement, causing other $50 million in loss. Now you think why it's actually connected and why does it matter now? Because researcher from Technical University of Darmstadt who studied this incident warned that this is not solved problem. It is growing one. They identified new manipulation method called false news trigger, where bad actors spread false information during moment of high public attention to profit from their result price swing. And here is the critical point. Before the ETF, the audience was mostly experienced crypto trader. Now it's the common people as well. The ETF did not fix the vulnerability, it simply brought more people and more money into it. Regulatory hurdles is the second concern. In the United States alone, three different agencies apply completely different rules to the same asset. SEC treats as security, CFT treats as commodity, and IRS treats as property. The Bitcoin ETF may have a regulatory front door, but the asset underneath it's still open in one of the most fragmented regulatory environment in the world, and internationally the picture is much more messier. Some country welcome crypto, other ban it entirely. There is no global standard, no universal protection, and no single book rule book. Investor protection is the third issue that is most relevant. This is something to consider. The majority of cryptocurrency investor prior to Bitcoin ETF were seasoned trader. They were aware of danger. Now that every major broking offer a regulated ETF, a whole new industry has emerged. Common people. But researcher Mohammed Sayed Khan warned clearly that the lack of consumer protection in crypto makes fraud risk significantly worse. And economic security non-profit better market went even further, warning that the Bitcoin and crypto remain the preferred product of speculator, gambler, predator, and criminal. The ETF makes Bitcoin accessible, but accessibility without genuine protection is not safety, it's exposure. And last one is cybersecurity, and history continues itself. One of the major cybersecurity exchange in the world, Bybit, experienced the largest hack in the history in history in February 2024. $1 billion bank run occurred with 24 hours after attack took $1.4 billion in a single incident. Connect this to the Bitcoin ETF now. You are not actually holding the Bitcoin when you purchase an ETF. You are putting your faith and on a centralized organization to handle it. Hackers target that institution as a high value target. The ETF does not increase Bitcoin security. It increases the target and centralizes billions of dollars in one location. Current state. The crypto ETF regulatory landscape has changed significantly. The SEC reduced clearance time from 240 days to 70 days on September 17, 2025. And when it authorized to new generic listing rule for cryptocurrency ETF, this order enables exchange like CBOE, NYSE, NASDAQ to expedite digital asset fund without separate SEC security. One of the investment side, Bitcoin ETF now hold over 137 billion in asset under management, representing nearly 7% of total Bitcoin supply. Major wealth managers include Wells Fargo, Bank of America, and Vanguard have also opened Bitcoin ETF distribution to the clients. Spot ETF are just one of the type Bitcoin investment instrument, and there is ongoing discussion over which strategy is best for investor. First, let's talk about future ETF product that not contain real Bitcoin include ProShare Bito, which was introduced in 2021 rather than they use future contract to indirectly monitor the price of Bitcoin. Due to beneficial tax rule, they continue to draw investor today, especially active traders, regardless of how long you actually held the investment. 60% of future ETF return are classified long term and 40% are short term under US law. There are there are Bitcoin Trust, one of the first regulatory product that let investors access Bitcoin through a conventional broking account was Grayscale Bitcoin Trust, which was introduced in 2013, but it was a closed-end trust. Its shares often trade as substantial premium or discount to the true value of Bitcoin. Only when it changed to spot ETF January 24 was the structural issue fixed. Tokenization is the innovation part of crypto. ETF are evolving through the concept of directly representing fund share on a blockage, allowing for 24-hour trading, nearly instant settlement, and lower administration expense. According to JP Morgan, customer anticipate that among all financial product, ETF will be experience the most advancement in electronification in 2026. Future of Bitcoin crypto. Here's what I think. One question has been essential answered by the Bitcoin ETF debate. Bitcoin is now recognized institutional asset. However, it has raised a new question in the process of answering that one. Bitcoin has given up its most valued feature, its independent from the traditional market, by accepting institutional capital. According to the data presented by Cross, Bitcoin moves in tandem with stock rather than against them. After the ETF, there is no longer any diversification. Thus, it is evident that Bitcoin will continue to expand in terms of size, validity, and adoption. Let us think carefully about the Bitcoin and its scenarios. The bullish situation relies on momentum. Digital asset allocation are currently held on plan or by more than 86% of institution. In this scenario, Bitcoin attained through mainstream adoption. It is sit alongside stock and bond on a worldwide scale. It's acknowledged by authorities and available to regular investors through well-known financial product. The base case is more complex. Bitcoin now trade alongside market rather than against. According to Cross, its connection with stock increased significantly, indicating that it's not safe haven but rather than a high beta growth. Counterpart integration is genuine, but there is a risk. The bearish scenario cannot be ignored. Geopolitical concern in May 2026 caused 1.5 billion outflow over 6 days, demonstrating how swiftly institutional wealth may leave. The main takeaway from the episodes are the SEC approved of spot Bitcoin ETF in January 2024 is structural milestone because it permanently altered the circumstances surrounding the discussion and surrounding Bitcoin, not because it settled the underlying issues. Different aspects of these changes are revealed by the viewpoint of regulatory purists and cryptocurrency supporters. Understand Bitcoin is no longer niche. Know your investment vehicle and watch the macro environment. Bitcoin now move with it, not against it, such as interest rate. This landscape evolve faster than any other area of finance. Stay informed, stay curious, and always let evidence, not emotion, guide your decision. Thank you.